There is a question I see a lot of people in the dividend investing community asking, should I only be looking at high-yield stocks? Or is there a place in a dividend portfolio for something like Microsoft? And honestly, it is a great question and a very relevant one, especially for beginner investors, because Microsoft is a perfect example of a stock that most dividend investors either dismiss too quickly or overlook entirely. The yield is less than 1%. On the surface, that sounds like it has no business being in a dividend portfolio. But when you look past its current yield and understand what Microsoft has returned to long-term shareholders, the picture looks very attractive. So today we are going to go through Microsoft as a dividend stock, look at its yield, growth streak, dividend growth rate, and the total return. By the end, you will have a clear view of whether it deserves a place in your portfolio. Please remember, this is not investment advice. Always do your own research before making any financial decisions. Let's start with the business. Microsoft is one of the largest companies in the world, and it has successfully reinvented itself multiple times over its history. Most people think of Windows and Office when they think of Microsoft, and those products are still very much part of the business. But the real engine of Microsoft's growth over the last decade has been its cloud computing division, Azure. Azure is now one of the 2 or 3 dominant players in global cloud infrastructure, competing directly with Amazon Web Services and Google Cloud. Businesses around the world rely on Azure to run their operations, store their data, and power their applications, and that creates an incredibly sticky, recurring revenue stream that grows as those businesses grow. On top of Azure, Microsoft owns LinkedIn, the world's largest professional network. It owns GitHub, the platform that the vast majority of the world's software developers use to build and share code. It owns Xbox and a significant gaming business. And through its investment in OpenAI and the integration of AI tools across its entire product suite, Microsoft has positioned itself at the center of what many people believe is the most significant technology shift of a generation. What all of this adds up to is a business that generates enormous, consistent, and growing free cash flow year after year across multiple revenue streams in markets that are expanding rather than contracting. And free cash flow is what funds dividends. That context matters when you are evaluating Microsoft as a dividend stock. Microsoft also benefits from its strong pricing power. When Microsoft raises the price of Office 365 or Azure services, its customers largely absorb it because the cost of switching away is so high. That kind of embedded, defensible revenue is not so different from the reason people keep buying Coca-Cola or using Procter & Gamble products. The moat looks different, but the principle is the same. Now let's get into the dividend numbers, because this is where Microsoft either wins or loses its income-oriented investors. Microsoft's current dividend yield sits at 0.94%. If you are used to dividend stocks with yields of 3, 4, or 5%, that number is going to look small. If you invest $10,000 in Microsoft today, you are going to receive less than $100 in dividend income in your first year. The reason you own Microsoft is what happens to that dividend over time. Microsoft has raised its dividend for 21 consecutive years. That puts it firmly in the category of companies with a deep, institutional commitment to returning cash to shareholders. Every single year for over 2 decades, through the 2008 financial crisis, through a global pandemic, Microsoft has found a way to increase that dividend. That kind of consistency reflects the underlying strength of the business. And the rate at which that dividend has grown is where things become exciting. Microsoft's 10-year dividend growth CAGR has been 10%. That means the dividend has been doubling roughly every 7 years. So while the yield on today's price looks modest, the yield on cost for someone who bought Microsoft a decade ago looks very different. An investor who bought Microsoft 10 years ago at around $50 a share and has watched that dividend grow at 10% per year is now receiving a yield on their original investment of over 7%. That's a yield that is comfortably ahead of what many traditional dividend stocks are offering today. Microsoft stock is a dividend grower. The income it generates for its investors gets better every year, and long-term patience is rewarded massively. Let's now look at the total return, because this is where Microsoft has delivered exceptionally well for its shareholders. Over the last 10 years, Microsoft has delivered a total return of 705% with dividends reinvested. To put that in context, a $10,000 investment in Microsoft a decade ago would be worth around $80,500 today. That is one of the strongest 10-year total returns of any large company in the world. Stretch the timeline out to 30 years, and the number becomes almost difficult to process. Microsoft's 30-year total return with dividends reinvested is more than 5,400%. It is worth noting that Microsoft only began paying a dividend in 2003. So the first part of that 30-year period predates the dividend entirely. But that context actually strengthens the case rather even more. A $10,000 investment in Microsoft 30 years ago would be worth over $500,000 today. That is the compounding of a great business over a long period of time, and it is a reminder that total return, not yield, is the real measure of wealth creation for long-term investors. So how do you think about Microsoft in the context of a dividend portfolio? Because that is really the question this video is trying to answer. The honest answer is that Microsoft does not fit the traditional mold of a dividend stock. And if you are building a portfolio specifically for current income, if you need that cash flow today, then Microsoft's sub 1% yield is not going to move the needle for you in the near term. There are better options for income right now. But if you are in the accumulation phase, building a portfolio that you intend to hold for 10, 20, or 30 years, then Microsoft deserves serious consideration. The dividend growth rate of 10% per year means your income stream from Microsoft will roughly double every 7 years. The total return track record is extraordinary. And the underlying business, cloud computing, AI, enterprise software, gaming, is positioned in markets that are growing rather than shrinking. The case for Microsoft in a dividend portfolio is not about yield today. It is about what that yield becomes over time, backed by a business that has consistently grown its earnings, consistently raised its dividend, and consistently delivered exceptional returns to patient shareholders. Not every stock in a dividend portfolio needs to be a high yielder. Some of the best long-term dividend investments are companies that start with a modest yield and grow it aggressively for decades. Microsoft is one of the clearest examples of that category in the entire market, and I personally believe it will continue to pay and grow its dividends for a very long time. Thank you for watching until the end. I hope you have enjoyed the video. If you have any questions, please put them in the comments section and I will do my best to answer them. See you next time.